Hello everybody and welcome back to the channel. My name is Gio and every day I teach you guys why the market moves the way that it does. Today we're going to talk about Bitcoin, but before we do that, this background that you're going to have to look at is because we're doing renos upstairs, so the entire upstairs is now downstairs, but that's not what you are here for. Let's dive into Bitcoin, okay? I want to go over some of my levels that I'm looking to trade, and I want to go over why I'm looking for these levels. I am in a very recent, very fresh, very young scalp short from this zone right over here, and I am looking to TP probably some point during this video, but I want to go over the bigger stuff and kind of what I'm seeing here, okay? And kind of what's going on. Before we begin the actual TA on TradingView, I want to go over the CVD, okay? If you don't know what CVD is and the open interest, it's basically going to show you how many traders are opening or closing positions and in which direction, okay? And currently we do have I wouldn't say very, but somewhat bullish CVD, okay? Where you can see here that on our CVD indicator on coinalyze.net, price is making a higher low, while CVD people are aggressively shorting. Open interest isn't necessarily the most bullish, okay? It's better if open interest is increasing because that means more people are shorting as opposed to potential longs just taking profit, which we're going to talk about in just a minute. But more locally speaking, in this little consolidation we've had as of late, you can see more traders are opening positions and more shorts are opening. And so this does arise for a situation where we get a short squeeze. Now, what does this short squeeze mean for Bitcoin? And really, like, what can we look for in the macro of it? Okay. Everybody that I'm seeing anyways with my algorithms, I don't know how, but everybody is always so bullish. And all I ever see is people talking about how everybody else is bearish. So I don't know what's up with my algorithms. I don't trade based off of my algorithms. You can see here I jumped in on the FAG index and I don't really care for this. I don't really check it. I haven't checked it in like 2 months, but the FAG index is at 46. I'm in the belief that this thing is fabricated. Like, I don't even know where this data comes out of. Who's scared? We're at $96,000. You know, who could possibly be scared? Anyways, I just wanted to make that known. Sentiment to me is still extremely bullish, but what I'm seeing is that the other creators and everybody else is talking about how bearish everyone else is. So if you're a sentiment trader, then, you know, take that with a grain of salt. I'm seeing everybody be bullish, but ultimately I don't care. I have levels for every situation. Now, in regards to this potential short squeeze going on, as we just indicated, your open interest is not increasing throughout the entirety of the macro range. We are going to talk about the macro range here in just a moment. But open interest is not increasing. It's only increasing on this little consolidative area right over here, okay? For the benefit of the doubt, I will call this entire zone bullish CVD currently. The thing with bullish CVD is all CVD is leading until it's not, which means there's no true way to confirm CVD, whether or not the shorts. So just to give you a picture, what this is more people are shorting, right? But price is not going down. However, if price starts to go down, then the shorts will overrun the longs, the bears will overrun the bulls, and price will go down. So it's leading until it's not. It's bullish until it's not. That's a very important detail. And to understand whether or not it is going to be leading, for me, the way that I confirm is that I have to have some form of market structure flip, okay? So right off the hop, while we're looking into this range right here, we're looking for some form of market structure flip. And today we had CPI data and, you know, we had some crazy sell to buy and, you know, now we're here. But let's talk about the trades that I'm looking for, okay? The very first thing that we need to note in this range, and I know this is a lot, but I'm going to go over it, is the liquidity above, okay? So we do have decent liquidity above. Now, I've made my case for this entire macro range. You know, I haven't been on YouTube live recently at all, but I will be returning to live this week. So, you know, make sure you stay tuned for that. But we do have a lot of liquidity building up above us. My only problem with this liquidity is that, to me, I believe we need to bounce off of some form of key level to attack, to have enough juice, to have enough gas to get that short squeeze, okay? There needs to be a significant enough level for us to hit that. And I'm not quite sure yet that we hit that level, which is why I just scalp shorted. I'm not quite sure yet. So I'm going to go over the levels that I'm looking for. Perhaps you might see them in the future and they've already hit. I don't know, but I am going to TP on my short actually right now. Let me do that literally right now while we're here. I'm going to take a little bit out because this is a potential long zone, but the key word is potential because I don't know if this is the long zone. Okay, we have a breaker block here. I'm not crazy about using the breaker block, but let's go over the structure. So I said the way that I trade the open interest, the CVD, I need to see some form of market structure flip. And we did now recently get kind of, not great, but internal market structure flip. Okay, you have high, you have low, you have lower high, you have lower low SFP, and then now you have a high and a break. This is why I'm saying I'm going to take profit here. This is why I'm saying I was in a scalp short. This is why I'm saying I am going to be looking now for longs, preferably not where we are right now, not in this box, okay? Not in this zone that we're in right now, which is between 96.5 and 96.2. Not really looking for longs there. I would like a little bit lower, perhaps back down to 95.5, or my absolute favorite box, which is 93.6 to 92.6. Okay, and I want to go over this level because this level is of the utmost importance, right? It's for the most importance. The reason why is because between, and these are only my levels, guys, okay? I can only tell you what I'm doing. Between where we were currently this morning from the CPI fake out to where we are currently, or the low, is that box. This is the only zone that I have. This is the only other demand we have. We have one more 45-minute block, okay? And if that zone fails, in my opinion, you're probably going to come for the entire macro range low at 89K. Okay, there's nothing else in between. I don't imagine that Bitcoin will bounce or continue to bounce from anywhere else. Okay, so because we had this SFP of this low earlier today in this kind of local range, I am, and now we got the break, I'm obviously more open to the ideas of longing this guy up to 104. Why 104? Like, so you can see all my positions, all of my longs, despite me saying I don't think this long is going to work out at all. I am ready for this one to work, and I am ready for this one to work, but I prefer, of all of them, I prefer this guy here. Of all the longs, I don't like this one, but look at how all the longs are shooting up to 104K. Why? Because we have that liquidity above that was formed. We do have, as at the current moment of recording, leading bullish CVD. That might change. Okay, that might change, and I'm fully prepared to hold this short a whole hell of a lot more than a lot of the perma bulls are going to enjoy. But these levels here between 103.6 to 102.6, I'm looking up towards 104, and then I'm looking for a swing short. Okay, why am I looking for a swing short? If we come back to the open interest, we can see that it's only in this recent leg. It's only in the recent leg where you have bullish CVD. I mean, look, yes, technically the rest of the range is bullish currently at the time of recording. However, the problem with this is that it's bullish because people are closing their positions. Sorry for jumping around. Apparently, open interest doesn't load if you're on the 1 hour time frame for me, if your name is Geo. So because look, it's okay, it's not loading, but you have, because the bullish CVD, right? Because it's only classified, to me anyway, bullish in this last little range. I'm not going to shoot for the range high, okay? I can't shoot for the range high based off of that data. I can shoot for a level that makes sense, and this is an unmitigated zone that we've been watching for like 3 weeks now, where I'm looking for swing shorts. My favorite path, I'm going to draw out my favorite path to you right now, okay? My favorite path is to fake out all the structure traders that we just flipped bullish, right? Fake out all the structure traders, come down, hit the 45-minute order block, and then come back up. Hit the 104, whatever. I actually prefer that we range here a little bit, and then we pop and then down, retest, off and away, okay? And what this would do is this would eliminate all of the bears that are shorting the bottom of the macro range, shorting this little, like more local range. It would eliminate all the bears, right? And then it would get everybody bullish once again. And what would happen, I imagine, is that people would start to, because open interest is up right now. So traders are trading. What would happen is open interest would continue to decrease. Okay, open interest here would continue to decrease over time. Why? Because that would be the shorts closing and longs would be opening. The CVD would start to turn a little bit, but ultimately in the more macro range, until I can start to see new longs come in, I cannot maintain a bullish macro bias in this macro range, okay? And it's simply because what CVD is showing us right now, because the open interest is decreasing across the entire macro range, is that longs are closing, okay? So whether that's the bulls getting worried in this zone, maybe that's what's making this the FAG index 46, I don't know, right? Whether it's the bulls getting worried and closing out their long-term positions, or it's just a short squeeze, either way, the CVD, remember, it's not going to be, for me anyways, I need to see the open interest increasing. I need to see more shorts yet the price is not going down in order for me to maintain or to have a bullish bias in this macro range. And I'm just not seeing that yet. Okay. In addition to that, if we hide all the technical analysis for just a moment, and we just look at our macro structure, listen, for me, guys, again, I can only tell you what I'm doing. For me, market structure is king. Okay. Market structure is king. No indicator is going to triumph market structure ever. Okay. And objectively speaking, what is your macro market structure? Okay. We have low, we have high, we have higher low, and then we have higher high SFP. And for me to trade, when I'm trading structure, if you SFP 1 point, your target is going to be the other level, right? Or the swing point that failed to take out that new high. Not only that, but we do have this liquidity that is beneath the range here. So, or beneath these lows. These are like almost semi-equal lows, right? After getting an SFP. And for that reason, I must maintain my bearish bias coming out of this range. Currently, with the data that's presented for me right now, I believe we are going to break down from this range as opposed to breaking up from this range. The reason I think that is because if you're coming to Market Cypher, you can see your money flow and your momentum waves are aggressively giving bearish divergences. Now, before anybody says, Geo, you said that in the last range, absolutely, I did say that in the last range, and I maintain it. Look, it's not going to go up forever, period. It's impossible for it to do so. And so long as the divergences are showing me this, I have to be at least aware of the possibility that Bitcoin can go down. Not to mention something that we've discussed multiple times on this channel, in how in our entire bull run, we have not had any decent retracements. We have had consolidations, and this cycle, I very much learned that you can consider consolidations a correction. Absolutely. And that's what we're getting right now. So is it possible for Market Cypher to do the same thing that it did back in this more macro range, where you hit some red money flow, you start to get some momentum waves to the low, and then it kind of just hangs around here? Yes, absolutely. I do believe that. However, the only problem right now is that we have equal lows on the lows. Okay. And we have that SFP on the high. Okay. So like I said, look, I'm a reaction trader. I don't care where price ultimately goes. I don't care if it goes up or it goes down, but I'm a very technical trader, and I'm aware that structure is king. And right now, structure alongside Market Cypher is pointing a little bit lower. How low does it go? I don't know. I just went over my scenario for you. I want to go a little bit lower, fake out the market structure flip guys here, right? One more time, hit 93, and then go to 104 and hear me out. If this happens and it goes to 104 and it continues beyond 104 and goes to 200, 300, 10,000 million, I don't care, then so be it. I'm open for it. However, I cannot ignore the data that's presented to me right now in real time, the same data that everybody else has. CVD is not as bullish as it could be in this zone. It's bullish, right? It is, but it's not as bullish as it could be, right? And if I'm going to go off of kind of iffy bullish CVD, I need to not be iffy about things like this, right? About money flow aggressively coming out of this range. You're getting consistent divergences. We have divergences on the weekly time frame that are confirmed. We have divergences on the monthly time frame that are confirming. Okay, I can't fade this data, and I can't say, okay, CVD is bullish, go to the moon from here based off of CVD that's kind of 50-50, right? I need some more solid data to be aware of, or to be more certain and more certainly defined from all scenarios. Okay, and just to show you guys, if whoever doesn't know, again, a divergence is when your oscillator is making a lower high for the bearish version, right? Lower high, you can see here on the low, right? Your momentum waves and your money flow are making lower highs while price is making a higher high. If you come over here, you have weekly divergences, no different than we had back in 2021. And the result of those divergences was the bear market. I'm not saying it's the bear market. I'm not saying we're not coming for another high. I'm not saying it's not going to 120, 130, 150, and 100 million that you guys all want. That's not what I'm saying. What I'm saying is the way that I'm approaching this is I got to be a little bit more cautious, because I don't have any solid evidence to suggest, like what's appearing to be on my feed, everybody is always so aggressively bullish. I don't have that conviction just yet. If we come down to any one of my boxes here, right? If we come down to between 96 and 92 and I get a nice confirmation, I'm going to take the long. If we come down to 95.6, 95, I'm going to take the long. If we come down to here, this is my preferred scenario. My absolute favorite way that this whole range is going to conclude is we come down, we hit 10 or we hit 93.2, whatever. We come up, we squeeze all the shorts, we hit 104, we range, we hit a nice Model 2 or a Model 1 distribution, and then down to like 85K. And then we'll see. Okay, that's kind of what I'm doing right now. We've been killing it. If you want to join the Nexus, the link is in the description down below. And aside from that, I guess just let me know what you guys think. Do you guys think that we're going to break up or break down from this macro range? Keep in mind before I say goodbye to you, that this is only based off of the information that I have right now. And of course, things are subject to change. I'm not a financial advisor, so do not trade with me blindly. Do your own research. But yeah, if you would like to know and be kept up with what I'm doing in real time and get my calls and get my analysis and get my morning streams every morning, and you know exactly what I'm doing, then good thing I took profit on that short there, huh? Then the link for the Nexus is in the description down below. And if you are looking to trade with me on the exchanges that I trade on, it's also a free way for you to help support me. In addition to hitting the like button and subscribing, you may trade with me on the exchanges that I have in the description down below as well. Okay, MEXC is now KYC, but KSEX is a KYC free exchange that is from the same founder. Okay, so those are my top two exchanges alongside Weeks. Thank you everybody for watching, for liking, for subscribing. Trade safe, and again, I will see you on YouTube Live later this week. Oh yeah, one more thing I forgot to mention is I don't really have any levels below this 45-minute order block. Okay, so in the event that we don't get a reaction here, again, I will look for a reaction off of this low. However, I don't think it's gonna necessarily work out. And if you don't hold 89, guys, I mean, I don't really have anything until at the earliest 85, but realistically, like, I think coming down to 74 is a pretty probable option. I don't know if it's going to go that low. Again, with the data that I have currently, this is the only thing I can do. The ideal scenario, if it's not going to hit here, is we do come down, perhaps form a PO3 and range in the 80s maybe. But we ultimately need to be aware that there is a lot of liquidity to the left that we have to come for. And should this bullish CVD end up being leading and it's not as bullish as everybody thinks, and it doesn't just go up forever, then I do suspect that we will be seeing the mid to low 80s. So yeah, that's it for me.